Yeah, sure. All right. Good morning, everyone. We'll give it a couple of minutes while people join. So just bear with me. We'll give it a few more minutes for people to join. And I shall drink my coffee while we wait. For those of you just joining, if you're on Zoom, if you go to the bottom of the screen, you'll see a Q&A box. It's the little speech box with a question mark in it. If you open that Q&A box, then you can type in questions. I prefer if you type questions as we go. That way I can answer them in the relevant section. I might try do something a little bit different. For those of you that have joined one of these webinars before, there's no real updates to cover. Mainly, I just want to go through some of the Freezone exemption stuff again. But we want to keep on holding these webinars because people are still asking pretty good questions. The level of technicality is getting higher in the questions. So, we'll try and spend 30 minutes running through the basics and some of the stuff, but we'll try and spend most of the time on questions. So please send through questions while you can. Again, for those just joining, down the bottom there's a Q&A icon, and you can just click on that and it'll bring up the box and you can type your questions. Cool. Questions are already coming through, which is great. We'll just give it another minute or so before we start. Some people had sent in questions already in response to the invites, which is great. So I'll have those ready as well. I might even put them up on the screen. I'll just make sure there's no identifying parts on those before I do, obviously. All right, we'll give it 2 more minutes because the attendee counter is still ticking up. Some good questions coming through. Also, we should have time today. If you've got any VAT questions as well, feel free to pop them through. Feeling generous today, so let's cover as much as we can. We'll also quickly touch on there was a change in economic substance regulations as well, which someone's question has just reminded me of. All right, let's get started. So just apologies for those hearing this for the 3rd time, but for those of you who have just joined, if you're on Zoom, go to the bottom. If you look at the bottom of the screen, there's a little Q&A icon. If you click that, it'll bring up the Q&A box. So just feel free to put in your questions as we go. I'll try and answer them in the relevant section. If there are some good technical questions, what I'll do is I'll go to those at the end. We'll put them on the screen and walk through them. Okay. And just again, for those of you that have joined, that have been to this webinar before or came to the last one, there's not really anything too new in this one. So please, if you have technical questions that you want to go through, pop those in and we'll try and get to those as well. All right, I will just share my screen. Please bear with me for 1 second. Sorry, where are we? Here we go. There we go. That should be on screen now. All right, that's me, obviously. Let's. So I've just been walking through high level what we'll cover today, but we've now spoken to literally thousands of businesses. I think we're over 5,000 companies now that we've been speaking to on corporate tax, and so we have a really good idea of what the main concerns are or what the main questions are, especially around that SME segment, micro and small organizations. So what we'll go through today specifically, and we say these are the basics, but not really, because it does get a little bit technical. So main questions are, does it affect me? And if yes, when does it affect me? What do I need to do and by when? And then, of course, the question, will I actually pay tax? So the very first question that always comes through, and I can already see it being asked in the Q&A, is who is actually impacted by corporate tax? So it's a very simple answer, right? Every single company falls under corporate tax. Okay, so I'm getting questions here saying, I've got I'm in a certain free zone, or my profit's under a certain level. Unfortunately, every single company, you still need to go through the compliance steps for corporate tax. You might not need to end up paying any corporate tax, but every single company needs to go and do the compliance steps, which are registering for corporate tax so that you get a tax number. You need to keep proper accounting records, and then you'll need to file a tax return. We'll go through those steps, obviously, in more detail. But the main point here is that it applies to every single company. Okay, it doesn't matter how small you are, even if you haven't started operations. It doesn't matter if you don't have a bank account yet. Some people, link that to the need for tax. None of it matters. Okay, if you have a company here in the UAE, you need to, in most cases, you need to have already registered for corporate tax. The only businesses that have special rules are offshore companies. So if you've got a company in RAC ICC, for example, most of those still fall under corporate tax, but there are some instances where you are a non-resident company if you're an offshore company. And then the other one are what are called natural persons. So freelancers, basically, if there is no separate entity, so no company, and it's just a freelancer license, for example, you only have to register. So you only get treated like a company once your annual revenue hits 1 million dirhams. So Fadi, I can see your question there. When you say you have a professional license, if that means you have a freelancer license, so you're operating as yourself, not operating as a company, then you need to register if your revenue hits 1 million dirhams. But aside from freelancers and offshore companies, every single UAE company has to go through these steps that we're about to go through. Straight away, I've got a question here around offshore companies. So generally speaking, if you have an offshore company, if you run that company from here in the UAE, so if you have, say, a RAC ICC or a ADGM offshore company, if you are running that company from the UAE, then generally speaking, that will be a UAE tax resident company. And so it gets treated the same as any other UAE company. Okay. Cool. Let's move on. Oh, another question here. Sorry. And I'll do this a little bit through the presentation. I hope no one minds that I'm jumping around a bit. Question here saying, if I only use my business for a visa, do I still have to file? Yes, you do. So just to confirm, so these are the compliance steps that every company has to do. Okay. Corporate tax is very different to VAT. Okay, with VAT, you only have to go and register once you hit a certain threshold, or you have a certain level of expenses, and then you only have to file under certain circumstances. Corporate tax is the complete opposite. Okay, so corporate tax, everybody has to opt in, right? So everyone is captured by corporate tax, and you have to prove if you're not paying any tax. Okay, so the default position for corporate tax is that you are a tax-paying business, and you have to prove if that's not the case. So if you just, for example, this question here, if you have your company just for visa purposes, that's fine, but you still have to go and register it. You still need to file a tax return, and you still actually need to submit a set of financial statements, even though those statements will say, that the business did nothing, but you still actually have to submit it. The Federal Tax Authority won't accept a tax return unless you've got that those statements. Okay. Hopefully that clarifies. And another question here around offshore companies. Yes, so if you're an offshore company, but you are deemed to be resident in the UAE, which for most offshore companies in the UAE, you're going to end up being a UAE resident, especially if you're the owner or you're running it and you live here in the UAE. Normally that means that the offshore company is resident in the UAE, and so you get treated the same as any other Freezone company or any other UAE company. So yes, Sabine, you would need to file yearly tax returns. All right. Next very common question is around your financial year. Okay, so there are basically 3 or 4 buckets that you fall into. So the default financial year in the UAE is January to December. There are a couple of free zones which don't follow that pattern. So if anyone here is registered in Dubai World Trade Center, DWTC, probably worthwhile having a chat to us separately, and we'll take you through the timing of your financial years. But for pretty much everyone else, mainland, free zones, designated zones, the free zone rules are that you follow or you default to the normal financial year, which is just January to December. What that means is, well, the question is, when is your first taxable year? Okay. There's a few rules around this. There's a very easy way to work it out. All right. So you just need to know when you opened your company. And then there are some rules that you need to apply. So if you opened your company, or if your company was opened before the 1st of June, 2023, okay, so if you've had your business for a couple of years, or you started it or opened it early last year, then your first tax year is January to December 2024. Okay, so your first tax year is 2024. Anything that you did in 2023 or earlier does not count for corporate tax. All right, so 2024 is when all of the tax activities kick in for you. Again, that is if you opened your business prior to the 1st of June last year. All right, that's the easy one. So if you've had your business open for a number of years, or you opened it, first half of last year or early last year, then 2024 is when you become taxable. If you opened your business in the month of June 2023, this is the tricky one. Okay, so if you just opened your business within that month of June 2023, you fall into an awkward little bucket where your first taxable year is a short one, and it goes June to December 2023. Okay. If anyone here on the call opened their business in June 2023, I really recommend you have a chat to us. At the end of this, I'll put up a QR code, which you can, book a free session to go through these in more detail if needed. But But if you opened your company in June last year, just within June, you've got a bit of a tricky one, okay? And the FTA has released a bunch of guidelines around this, specifically for this one anomaly. Please come and have a chat to us afterwards, because you just need to submit an extra tax return. All right, the next bucket, okay? So if you opened your company from the 1st of July last year. Okay, I've got a question. Sorry, just quickly. I've got a question here saying, if my company is April 2014. Okay, just a reminder, if you opened your business before the 1st of June 2023, so before June last year, your first tax year is the year of 2024. If you opened your company in June, specifically in June last year, come and chat to us. The next bucket is if you opened your company from the 1st of July last year, okay, so in the second half of last year, up until the 1st of July this year, all right? So the second half of last year or the first half of this year, all right? Your first tax period ends on the 31st of December this year, all right? It's just the way that the Freezone financial years work. So that is between 1st of July last year up to the 30th of June this year. You've got a tax year which ends on the 31st of December 2024 this year. And then the last group are ones that have just opened their business in the second half of this year, okay? So if you've only opened your business in the last couple of months, your first tax year runs all the way through to December 2025. So you have a long tax year. I know that gets a little bit confusing. Again, if you're not sure, jump on the QR code, which I'll show towards the end of the presentation, and we can work it out for you. Okay, we've already talked about the compliance steps, but just a reminder, every single company needs to do all three of these, okay? Again, regardless of, when you registered, regardless of whether you have a bank account, regardless of whether you're active or not, or small or big, or, you have to do these three steps, and there are fines associated with not doing these things. Okay. Now, for the registration deadlines, just for a moment, I want you to forget everything that we've just spoken about tax years and all of that kind of stuff, because the registration deadlines, think of these as a standalone set of deadlines to be registered for corporate tax, okay? The way you do this is if you opened your business, you need to look at your trade license, the very first trade license that your business received or was issued. So when you look at that original trade license, you need to look at the month in which it was issued, okay? And then you take that month and you look at this table that I've got on screen right now, right? And that shows the deadline for which you need to be registered or needed to be registered for corporate tax. Now, this just applies to companies which opened prior to this year, right? So if you opened in 2023 or earlier, then these are the ones that apply. Generally, if you're opening if you opened your company from the 1st of March onwards, you've got 3 months to register your company. So I'll walk through some examples. So 2 groups, okay? People that have had their company from before this year and earlier, okay? You need to look at the month on your original license and think of it as like the birthday month of your company. Then you need to look at this table, and that shows you your registration deadline. So for example, let's say that you opened your business back in 2018, let's say, and you got your license, your first license was issued in June 2018, okay? You ignore the fact that it was 2018, you look at the license month, which is June, so your registration deadline was August 2024, okay? If you opened your business in, let's say, October 2023, right, then you can see from this table, any October licenses, your deadline is November. So end of November this year. If you opened your business this year, okay, so if you opened your business, let's say there's a question here. If you opened your business in May 2024, all right, so any new business, you've got 3 months to do your registration. So unfortunately, Dom, if you got your license in May, say you got your license on the 15th of May, you've got 90 days to register. So your deadline passed on the 15th of August to be registered. So that's just for, you know, new licenses. Think of it, obviously, you know, if you get your license in December, it's quite hard to register in December according to this table, for example. So yeah, what you really need to do, you need to be, if you've already got your business open or you already had your business open prior to this year, then you need to be paying special attention to this table if you haven't already registered. Most of you should already be registered. If you're just opening your business this year, then you've got 90 days. You've got 3 months to get it registered. I've had a lot of people asking if we can get the penalty waived. We have not seen many get waived at all. In fact, none. You've got to remember, and this kind of applies to all penalties here in the UAE, right, for corporate tax, is that corporate tax is not just a UAE thing. We are now part of, or the UAE is part of think of it as a global tax system. And the UAE has made commitments at that global level, right? So we are now a good team player in the global tax system. Right, and the way that you enforce a tax system is through fines and penalties if you don't comply. All right, so unfortunately, the UAE can't just go around and waive a bunch of fines because that's not how a good player in the global tax system works. So they're very limited in their ability to waive, waive penalties. Some people asking here, when do you actually see the fine? Okay, it's a good question. So right now, right, so if you've missed your deadline, you won't see the fine until you actually go and do your registration. And it's at the time of registration that they'll check everything and go, okay, you've received the fine. You won't see the fine directly until probably September next year, right, which is the filing deadline. And at that point, the FTA is going to be going through, I mean, they're already, doing this with all of the free zones, get all of the lists of companies that were active, that haven't registered, and they will go and think of it as forcibly registering those companies, levying the fine on them. So the first you'll hear of it is the 10,000 dirham fine, and then you'll get the other fines for not filing and things like that. Okay. There are some other fines as well that you need to be aware of, but this is the one that obviously we're seeing most commonly right now. That in defense of the FTA, there has been a lot of noise around this deadline. A lot of publications. I know, hundreds of emails going out from all types of organizations. So, yeah, they won't have much pity for people that have just missed their deadline. Oh, good question here from Florence. So they've filed for registration during the month of the deadline, but it still hasn't been approved. So you just have to have your application in your deadline month. So, even if you get your application and if say you're missing a document or something, still go and get the application in, because then it's on record that you've submitted your registration by the deadline. So the FTA takes around 20 business days to approve the registration, but sometimes they can take a little bit longer. But the important part is to just get the application in by the deadline. Okay. Accounting. So for those of you that don't have a active business, and I can see a few questions in here from those that don't, you obviously don't have to do full accounting, but you will still need to submit a set of blank financial statements. You can't just leave the field empty when you submit a tax return. But for everyone else, assuming most of you have a an active business, you have to have proper accounting records. So you need to submit a profit and loss and a balance statement and a statement of equity and everything when you submit your tax return. You can't just send in some bank statements and go, here we go. And you can't just say, oh, look, trust me, my income was less than the threshold. You need to actually go and submit a set of financial statements. Generally speaking, you can't just go and do these on Excel. You need to be using proper accounting software. The accounting standard that is in force in general for the tax regime here is IFRS, International Financial Reporting Standards. So you should be, not only preparing these statements, but making sure that they do comply with those financial standards. Most companies, if you don't have an internal accountant, obviously a bit of a plug for Virtuzone and Tax Ready. We offer all of the accounting services here at a very, very good price. The main thing to be aware of is, whilst the registration fine is a big one at 10,000, the other big fine is the fine for not keeping these correct accounting records. So a bit of context for why the fine is so big for this. What you'll see in a second are some of the exemptions that are available, and most of these, or all of these exemptions, rely on taxpayers or companies having reliable accounting records. Okay, so the FTA is saying, we're going to give these very generous exemptions, but in return, we need you to be, making sure that you actually qualify for them by doing proper accounting records. All right, so it's a pretty hefty penalty if you don't do it, but at the same time, you've got to be doing that to get the exemption from actually paying tax. All right, 1 second while I take a sip of coffee. The fun part. Will I actually pay tax? Well, rather, as fun as tax can be. Okay, so first of all, we'll talk about free zone companies. Okay, so a free zone company basically needs to fall down or fail 4 criteria before it ends up paying any tax. A mainland company has to fail too, but we'll get to that. So a free zone company has the four different layers or 4 different criteria that it can meet. The first criteria it can look at is the location of its customers. Okay, think of it as like a free zone geography test. This rule says that if you just do business with other free zone companies, right, then you meet the criteria for what's called qualifying income. Okay, so I haven't encountered many clients who just operate within the free zones. It doesn't have to be within the one free zone. Think of the free zones across the UAE collectively as like a bubble or a layer. If you're just doing business in that bubble across the free zones or within the free zones, then you meet this criteria. Okay. It has to be with other companies. Obviously, an individual person can't be a free zone company. So the only clients I've encountered that do meet this are, for example, free zone companies that might be a marketing consultancy and have just got 2 clients who also happen to be free zone companies. Right? It doesn't apply if you go outside the UAE. That's not within a UAE free zone. And it obviously doesn't apply if you go into the mainland as well. So it has to be within that free zone bubble. It doesn't count if you go outside the UAE or inside the UAE. Okay, the next criteria you can look at. So let's say you're doing business inside the UAE, in the free zone, and outside the UAE. The next criteria you can look at are what's called the qualifying activities. Now, this is a list that the ministry has released. And it basically says, if you're doing one of these activities, one of these specific activities, then you meet the criteria for this qualifying, activities exemption. The list, which I'll show later on, it's very narrow and very specific, and it is very much focused around heavy industries. So manufacturing, trading and financing aircraft, shipping, insurance, those sort of big industry or institutional industries. Generally speaking, there are no service industries in that list. Okay, so let's say you are a management consultancy, or let's say you're an IT consultant, okay, and you've got clients outside the free zone. So you've got clients over in the United Kingdom, for example, and you've got clients in the mainland, so you don't meet the geography criteria. An IT consultancy is not a qualifying activity, so you don't meet either of those free zone criteria. Okay, that means you don't get the free zone exemption. But we can now look at the third exemption criteria. Okay, this one actually applies to mainland companies as well. It's called the Small Business Relief Rule. This is where if your revenue is less, your annual revenue is less than 3 million dirhams, you don't have to pay any corporate tax. Okay, that applies. It's available for free zone companies and mainland companies. And it doesn't matter where your activities are or what those activities are. If your revenue, so that's your top line revenue, is less than 3 million dirhams, then you're exempt from paying corporate tax. Just a reminder that you do have to go through and register. You still need to do your proper accounts, and you'll need to file those accounts with your tax return, because you need the only way you qualify for these exemptions is by going through those steps and proving that you qualify for them. Okay. Sorry, I've just had a question here. What is a qualifying free zone? So the term here is qualifying free zone person. So basically, if you are a company in a free zone, then you are a free zone person. If you meet one of the criteria for the exemption, they then call you a qualifying free zone person or qualifying free zone company. So it's not a type of free zone, it's just a term for a business that meets the exemption criteria. Okay, so using that IT consultancy example, right? So you've got clients outside the UAE, so you don't meet the geography test. You're an IT consultancy, so you're not doing a qualifying activity, so you don't get that criteria. But let's say your revenue is 1 million dirhams per year. Great. You won't be paying tax because you'll get the small business relief. So even though you failed the first two criteria, you only have to meet one of them. So you get the small business relief and you won't be paying any tax. One thing about the small business relief rule is that it only goes for the first 3 years of tax in the UAE. So what it means is that 2024, if your revenue is less than 3 million, you're exempt from tax. 2025 is the same, 2026 is the same. Your annual revenue, that's your annual turnover, your total fees. In 2027, that rule will be going away. So basically it goes back to a taxable business. Also, if you cross that 3 million dirham threshold in 24 or 25 or 26, that means that you lose that exemption going forward. So if, in 2024, your revenue is 2.5 million, that's great, you're exempt. In 2025, if your revenue went up to 3.5 million, sorry, you're no longer eligible for small business relief, and you're not eligible for 2026 either, even if your revenue in 2026 was under 3 million. One other thing just to point out here, and this was a question that was sent in by email. It doesn't matter if your 2023 revenue was higher than 3 million, because that's before tax came in. Okay, so numbers before tax came in don't matter, right? Well, profit numbers before tax came in don't matter. All right. Just some questions here, some specifics on this. So if you're a platform that offers online subscription to a website with customers all over the world, so your activities aren't qualifying and you have clients all over the world, so you don't meet the geography criteria either, so you'd only be looking at the small business relief rule. Okay. So let's just go into what a taxable business looks like. Oh, sorry, hang on. I've got another question here. We'll go through an example, right? So using that IT consultancy, so we know that you don't have qualifying, you don't qualify for the geography test. We know that your activities don't qualify. If your revenue is under 3 million, great, you're exempt. But let's say your revenue was 4 million dirhams, okay? That means you become a taxable business. And only then, only once your revenue goes over 3 million dirhams, does the FTA even start looking at your profit, okay? So if you've got a revenue of 4 million dirhams, that means that the FTA will start looking at your profit. So after you've deducted expenses off that revenue, and then your first 375,000 dirhams of profit is tax-free, right? So no tax on the first 375,000 of profit. And then everything over 375,000 dirhams is taxed at 9%. All right, so let's say, you're the IT consultancy, you had 4 million dirhams of revenue, but 1 million dirhams of profit, okay? That means you'd pay 0% on the 375 and 9% on the remaining 625,000 of profit. So you'd pay about 60,000 dirhams in tax. Now, I can see some questions coming through because it's a little bit confusing. If you're under the small business threshold, right, they don't look at your profit. So you could have 2.5 million dirhams of revenue and 2 million dirhams of profit, but your profit doesn't get taxed, okay? Because you're under that small business relief revenue threshold. Weirdly, you could have 3.1 million dirhams of revenue and 1 million dirhams of profit, and you get taxed, okay? Even though you've got less profit, but because you're over that revenue threshold, unfortunately, it means that you become taxable. All right. Let's jump ahead. I'm going to go through some, there's a lot of questions here around, just quickly, before we get into some technical stuff on the free zones. I've had a lot of questions around people closing their business. There was a lot of people thinking, I don't know how this misunderstanding got out on the market, but people seem to think that if they closed their business before their registration date, then they didn't have to do anything for corporate tax, which was completely false, all right? So if you have closed your business or you are going to close your business, you still need to go through all of these tax steps. The registration deadlines still apply, all right? And you'll need to file a tax return to close the business, all right? Please make sure you're aware of this. If you have friends or anyone that is closing their business, make sure they know that they have to clear all their corporate tax obligations before they are free from the company. Oh, sorry, a couple of questions coming through. Apologies for jumping around, but I think it's quite important to answer these questions. So in terms of getting these exemptions, right, you only get these exemptions at the time of filing your tax return. So you don't need to do anything special at the time of registration, okay? It's only when you come to file your tax return will you go and file for one of these exemptions, all right? So when you go and file, it'll say, do you qualify as a qualifying free zone person, for example, and you tick yes or no and then justify why or leave it. And it says, do you wish to elect for small business relief? If your revenue is less than 2 million, you can click yes. And then, it's only at the time of filing your tax return that you actually need to do these exemptions. I'm getting a couple of questions around closing the business. Again, better to come and speak to us about that because there are certain steps you need to go through. Unfortunately, the UAE is now like the rest of the world where, closing a business, when you close a business, the hardest part of it is getting your tax clearance from the tax authority. So we're just like, Saudi, Oman, everyone else, where, actually closing the physical or the licensed business is the easy part. The hard part is now getting the clearance from the tax authorities. So please come and have a chat to us afterwards. I'll just quickly put up this QR code. So what this does is it'll just get you another free consultation with someone from my team. If you have especially if you have any questions around the compliance steps that we've just gone through. We'll come back to this QR code later on, but I know some people kind of tune out when we get into the technical designated free zone stuff. So if you've got questions already that you want specifically answered, please scan that, book a free consultation, and we can walk you through it. Okay, let's get a little bit technical. So, the qualifying activities. This is the list of qualifying activities. Now, as I mentioned, it's a lot of heavy industry or manufacturing. There are two that I want to speak to specifically, okay? One is the distribution of goods from a designated zone. And then the other one is trading of qualifying commodities. I've found that in the SME sector, these are the ones that seem to be of the most interest to clients. So the one that we've had, I guess, the most attention on is around what's called distribution from designated zones. Okay. If you are a trading company, now the FTA defines trading as you buy the goods, you take ownership of the goods, and then you sell those goods to a retailer or a distributor. Okay, so not to the end user. All right, so it doesn't include Amazon sales to an end user, but if you're actually, and it has to be physical goods. All right, so you buy those physical goods, your company takes ownership of it, and then you sell it to a third party who are going to sell it onwards. All right. If you are doing that trading activity, you can be exempt from corporate tax, but only if you are doing that activity from a designated zone. All right, a designated free zone. A designated free zone, for those that aren't aware, originally came up as they're like a customs bonded zone. So it's generally the ports. So for example, JAFSA or Dubai airports, Ras Al Khaimah has a couple of designated zone areas, or warehouse areas, for example. But a lot of these designated zones now have office space as well. And a lot of clients are now setting up in these designated zones because trading activity is exempt if you are doing it from a designated zone. It is not exempt if you are doing it from a standard free zone. Okay, so Florence, to your question, it all depends on which type of free zone. If you're doing trading activities, it all depends on what type of free zone you're in. It has to be a UAE designated zone. It's a good question from Florence again. So your company needs to be in the UAE designated free zone. All right, so JAFSA, Ras Al Khaimah, certain areas, DAFSA, Dubai Airport Free Zone Authority, Uae, I think, has one. If you are currently in a free zone, right, that is not a designated zone, and you are looking at this and realizing that you could be tax-free if you were in a designated zone, again, come and have a chat to us and we can walk you through, what needs to be done to do this kind of setup. It's not as simple as just moving your company, because in most cases you will have already disqualified yourself from this exemption if you're already trading this. But there is a way to, sort of reset up if you need to in a designated zone. Just to walk through some specifics on this. So the diagram that I've got on the screen right now shows that you're exempt if you're buying from country A, selling to country B, right? So the goods stay outside the UAE. that's going to be exempt, okay? But that's not the only one. Basically, any kind of trading from a designated zone, including inside the UAE, right, will be exempt under this rule, as long as you are in a designated zone. You can even, right, and this is where it's was a bit surprising when they released this rule. You can even be trading within the UAE, right? So you can get someone, you can go out in the designated zone, pick up goods from, you know, someone in the UAE, drive across the road and sell them to a distributor, and that activity will be exempt under this rule, but you have to be operating from a designated zone. The biggest hoop that you need to jump, or the biggest criteria that you need to meet to get this exemption, is you need to show adequate substance in the free zone. All right. Now, what that means is, oops, sorry. You need to show that you are actually, that you are actually running the business from within the free zone itself. Okay, so generally what that means is you will need to have full-time employees or an employee working within that business in the designated zone or the free zone. Basically, you need to be able to show that you're not just using the company here in the UAE as a way to move profits to avoid tax globally. Okay. A bit of a side note to this, you may have heard this week that economic substance regulations at the state level, the UAE level, have now been removed. So previously, the UAE had a countrywide, what was called ESR, Economic Substance Regulations. That was to show that if you had a business here in the UAE, that you weren't just using that business to shift profits into a zero tax country. Now that we have tax, we no longer need that, all right? So the ministry have removed ESR from the UAE, but they still have these substance requirements to get the exemptions, because if you're getting an exemption from tax, you need to show that you're not using it just as a, as a tax shelter, and you're actually running the company. Again, if you think this applies to you, if you're running a trading company or you think that you might be qualifying for a free zone exemption, come and have a chat to us and we can help you ensure that you actually meet these criteria so you can get that exemption. Okay, some more questions around closing down the company coming through. I'll just jump back. Again, please come and have a chat to us. It's quite detailed, so I sort of don't want to spend too much time on it. But yeah, I'll bring up the QR code again shortly and we can talk, and you can jump on a call with us specifically and we'll talk you through what needs to be done. So just one more thing on this. Obviously, yes, you'll need an employee, you'll need some kind of office space or a physical presence in the actual designated zone or the free zone if you're going for this exemption. I'll come back to that in a second. There's just one other one that I wanted to cover, which is qualifying commodities. So originally, the rules stated that commodities, so let's say you're buying and selling gold or cocoa beans or wheat or or oil products. Originally, the laws said that you had to be trading that on a recognized commodities exchange. The latest releases have loosened that rule a little bit and said that they don't need to be actually going through that exchange. They only have to be the same type of product that is traded on that exchange. So, easiest example, right? If you're buying and selling gold, you don't have to be trading through a recognized gold exchange for that to be exempt. You just need to be able to prove that the gold that is trading, that you are buying and selling, is 99% pure in bullion form, which is the standard that is traded on the recognized exchange. Okay, so you don't have to go through the recognized exchange, it just has to be exactly the same type of product. Okay, I know I've jumped around a little bit. I just want to remind you on the compliance steps. Please, if you haven't registered yet, your deadline is probably already passed. It might not have if you're lucky. Again, please come and chat to us. I'll bring up the QR code again so that you can jump on and speak to us if you'd like to. Like I said, you know, we're helping thousands of companies now already. We've got very, very good packages, very affordable, you know, including all of your accounting requirements. We do all the VAT. Yeah, we cover everything for you. So would love to speak to you more. Jump onto that QR code and book a call. And we've got a special package, even cheaper package going right now as part of VirtuZone's 15th anniversary. Okay, so thank you everyone who joined. Thanks for those of you that that are joining for, you know, the second time or not the first time. Some questions here. Will the recording be available? I'll check with my marketing team. I'm pretty sure it is. I think we're live streaming it as well, so I'm sure we'll make it available. We'll do another webinar probably in another couple of months. Again, feel free to join that one. Obviously, if there are any updates, we'll make that evident in the invite. Otherwise, we hope to speak to you all soon. Thanks.